Hi everybody, this is Osprey from MyChartCoach.com, and in this video, we're going to take a look at the indexes. We're going to look at technology sector, and then we're going to look at some stocks that are reporting earnings. And so first up is the Dow Jones Industrial Average here. So yeah, it's taking a little breather right now. It looked like a bearish Haremy reversal pattern formed yesterday, and then a red candle has followed today. There was a close below EMA 4, so it is taking a little pause here. It needs to get back above 25528. If that turns into resistance, it could consolidate. It's testing EMA 8. That's the lime line right here. That level, has been holding. It needs to stay above. It did close down below that just last week. It closed right at that level, and so it's going to need to hold that level. Otherwise, it could come down here and possibly test this 25,300 zone down here at this middle Bollinger Band. It needs to hold this 25,300 level to keep the uptrend going. So right now it has a very strong uptrend. It's just taking a little pullback and a pause. But if that EMA 4 turns into resistance, it could turn into something bigger. Okay, let's look at the Nasdaq Composite here. So we have multiple white candles in a row. It's been on an 8-day rally, so this is an epic run for the Nasdaq. Eight white, not 8 white candles. I had a black candle here, but you have 8 green volume bars in a row. It's pushing near the all-time high levels here. It needs to break above this closing price on the 25th. That's the big level to break. If it can get above 7,900, then you've got this all-time high on deck. Now if it pulls back and cools down, a drop below EMA 4 at 7871, that's where you can see it pull back and test that middle Bollinger Band down at 7821. It needs to hold this dotted purple line to keep the uptrend going. You can see the last time it got below that level was right here, and it came down and tested the 50-day simple moving average, similar to right here. With all the green volume bars in a row, you have to be on the lookout for the technology sector taking a pause, taking a breather. If you look at the NASDAQ 100 here, ticker symbol NDX, you could see it formed a doji today, and so the doji candlestick is a signal that it could take a pause, could take a breather, could take a pause. It's going to need to hold this EMA 4 at 7448 level. If it drops below that'll be the signal that it's possibly consolidating. You could get a drop, down here to test these lower support levels. After multiple green, volume bars and white candles in a row, the doji today is signaling that it could take a breather, could possibly take a pause and pull back. We'll know by whether or not that EMA 4 support holds. It's going to need to break this high close here on the 25th to break out higher. As you can see here, it formed bearish Haremy cross reversal pattern, and so with this reversal pattern formed, we'll be looking to see if it is confirmed. Doji's formed at tops many times, signal that it's going to take a pause. If you look at the triple Q here, this is ticker symbol QQQ. It's also formed the doji today as well. And so you've got this bearish Haremy cross on very light volume. I mean, look at the volume down here. So it's not like there's conviction behind this doji here. It's just, maybe there were just a lack of buyers today. Everybody's on vacation. Look at the low volume. It does have a declining volume pattern going, and so you'd be expecting a volume spike to come. If it's a green volume spike, you're looking for a push through this closing price on the 25th. Above 183 would be really bullish. If it drops below 180, 150, that's going to signal consolidation. Okay, if you look at TQQQ, okay, so it's coming up here and it's hitting these all-time high levels up here at this 69 level. If it formed the doji as well, both QQQ and TQQQ form the bearish Haremy cross reversal pattern as well, following multiple white candles and multiple green volume bars. If it drops below 6682, then it could consolidate. Okay, it needs to hold that level. That's EMA 4 here that's been holding during this push. If you see it dip below, that's where you could see it come down here and test that middle Bollinger Band at 65. Is the technology sector ready to break out to the next level, or is it going to take a breather? Well, we'll take a look at SQQQ here. This is the ultra short triple Q, and so this is betting on the the triple Q going down, you know, if the or QQQ going down, if it goes down, this will go up. And so right now it's at oversold levels down here on Fasto, and so it formed the bullish Harami cross reversal pattern today. It formed the doji during a downtrend, and many times that signals a bounce. Okay, so we're going to see here if it bounces for this stock, this ETF here. It needs to get above the the EMA 4 here at 1209. Okay, that's the big level to break, the pink line. Once it gets above that, look for a run up there to 1250. You know, get above 1250, and then you're looking at the 50-day simple moving average at 1322 as the target. You know, that's where it's been running to on the previous bounces. So we'll see here if this doji is just a pause, or if this is going to be the start of getting a bounce going and possibly a reversal. Check out all the red volume bars in a row, followed by a green volume bar today. It would be better for the bounce players if there was a big volume spike today. That would be a bigger signal that people were loading, but we'll see if it can break through resistance. Okay, take a look at ROKU here. Okay, this is ROKU. Had a great day today, closed up 21% after reporting earnings after hours yesterday. So it came up here and it's hitting this all-time high level from back here in December. And so it's going to need to bust through this 58 resistance zone to head higher, 58, 58, 50. It's hitting that right now. If it fails to break through, it could pull back and consolidate. This candle is breaking through that upper Bollinger Band. What you want to see now is you want to see the close here from July and February turn into support. You want to see the candle stay above both levels. You pretty much want to see it, you know, stay above 51, 52. If it dropped below, then that would signal it's pulling back and consolidating. Right now, it has pretty much just filled the jar back up to the all-time high, and what it's setting up for is a potential blue sky breakout. Once it breaks out above this resistance from over here in December, it'll be there'll be no overhead resistance. This just started trading back here on this candle right here, so there's no trading above this red line, and so that would be called a blue sky breakout. Okay, take a look at DBX here. Okay, so this closed up 9% today. They did report earnings, and so after hours it was down. They beat expectations, and but they did announce a departure of some insiders here. Yeah, it was getting put under pressure in after hours trading, and they actually dropped it down to 31.25. So that was a really big haircut after being up 9% on the day. You know that was close to a 10% drop. You know, it wiped out all the gains and then some. It was red, and after hours trading slightly red. In my opinion, the key level to hold is going to be this 50-day simple moving average at 31.98. You don't want to see it dropping back below that level. You know, that was big resistance back here in July. If it fails to get back above that level, it could pull back and consolidate. You know, you would see a drop likely down to the middle Bollinger Band at 30.71 if it stays at this 30.25 level and fails to get above 32. And then if it dropped below 30.71, that would be downside risk. Then this downtrend that started back here, that could continue. It could continue. It just got above the middle Bollinger Band just this week on Tuesday. So it's only been above the middle Bollinger Band for 3 days. Tomorrow, if it drops back below, that'll signal the new uptrend is broken and that it could consolidate. To the upside, what you want to see is a break above this closing price back here on the 28th of June. If it can break through this 33 resistance zone, then it could get pushing higher. But right now, it's all about staying above $32. Okay, take a look at TTD. They had a great day today. You know, they were up 2% during the regular trading, and then just a huge response in after hours from the earnings report. It was trading at 11.52 in after hours trading. This is a blue sky breakout. It's currently at new all-time high levels. It's never traded higher than this this 111 level. This used to be the all-time high on this candle right here on the 20th of July. It needs to stay above that level. If it can stay above 98, that would be super bullish. Right now at 111, it's going to be pushing to new levels. And then what you're going to need to do is follow the intraday charts to see the next resistance levels. To see what I would keep an eye out for tomorrow is a black candle. If they gap it up big, which it looks like it's going to happen, and then they pull it back and starts forming a black candle, that could signal profit taking, people locking in gains, and the bears attacking. Okay, so there's TDD information. If you look here at the weekly chart for TTD, you could see here that this is all the whole history of trading for the stock. It started trading back here in September of 2016, and so up here the old all-time high was up here around 98, and so now at 111. That means it's a blue sky breakout. It's never traded at these levels. So what you have to do is just follow the intraday charts, and if they start to break down, that's your signal. If you're a trader, to lock in gains. Just have to see how people respond tomorrow after the big gap up open. A black candle, if it starts trading below the open tomorrow, that'll be a red flag that the bears are attacking. Okay, let's look at OSTK here. This is overstock. Closed up 4% on the regular day. Yeah, this is an old chart. I made this chart back here when it was breaking above resistance on this candle back on the 17th of July, and you can see here it failed to stay above the gold line. That's the 100-day simple moving average, and it pulled back. It also failed to break above the top of the gap. There's a gap over here from back in March, and so right now it had positive reaction to earnings. This is the earnings, even though they topped on their revenues, but they had a big loss here. Yeah, I recommend reading about their earnings report here. Yeah, so the big thing here is now it's at 44.60, and so that's putting the share price way up here. So now it's above the top of the gap. In my opinion, this is the big level right now on the chart. The top of the gap's always a tough level. It's like the 200 or 300-day simple moving average. If it fails to break when tested, then that signals that it's a temporary top, and that's where you lock in gains. The same thing with the bottom of the gap. This is the bottom of the gap right here on this candle. Look how many times the bottom of the gap got hit and it failed to break above. And so each time, hitting that level was a lock and gain signal. And so that what happens when you break out above, now it needs to turn into support. And so you want to see the share price stay above the top of the gap level here. You want to see it staying above 44. That's like 43 something there. 43.50. It just can't get sucked back into this previous pattern. What you want to see if you're a bull is a breakout from this previous multi-month sideways channel. And so what it needs to break now to the upside is this red line. That is the 200-day simple moving average at 48.50. That's the next target if it can stay above the top of the gap. If it dropped below the top of the gap, that would be a sell signal. Okay, let's look at FNKO. All right, so this is stock has been on a tear. As you can see here, it was up 4% in regular trading. They did report after hours. You can see here they topped the estimates here, their EPS here by 7 cents. So 5 cents better than the analysts expected. They came in at 7 cents, and their estimate was 2. So their revenue came in at 138 million versus 122 million. So everything was strong here. There wasn't much reaction in after-hours trading though. It closed the day at 2012, and it was, last time I checked, it was at 20 after hours. So it's pretty much flat in after-hours trading. This is just a beautiful, strong uptrend. For people that are long-term investors, this has been a great stock. Just buy and hold, and as long as the chart is bullish, you keep riding. If you're a trader, once it drops below EMA4 at 1951, that's where you're going to get your consolidation. That gives you a chance to make a trade. That's when it comes down and tests, these lower moving averages. As long as that middle Bollinger Band at 1749 is holding, that dotted purple line, the signal is just to keep riding. The last time it broke below the middle Bollinger Band was back here in March, and it dropped below, and the 50-day simple moving average was real close by. It bounced right off the 50 and kept going. So if it ever did drop below that middle Bollinger Band, that's where you would get a drop down to the lower Bollinger Band and the 50-day simple moving average way down here. But right now the chart is super, super strong, and it's signaling more upside potential. It just didn't have much reaction to earnings. Check out this is the all-time trading of this chart. This is the whole complete history. You know, it started trading back here in October of 2017. It's just been on a tear. You know, if you're a longer-term investor, as long as EMA4 here at 1818 is holding, you know, the longer-term swing trade signal or investors type signal is just to keep riding. I mean, this is so strong that the signal is just to go with the flow here. There hasn't been a sell signal on the weekly chart in a very long time, and so you know this would be considered a breakdown back here, where it broke down below EMA4 on this candle right here, and then it followed with a drop. And so as long as this 18 level keeps holding and EMA4 keeps holding, the signal is to keep riding. Okay, let's look at VUZI. Yeah, so this is another one that reported today. This is a thinly traded stock, you know, less than 500,000 shares. It was finding support heading into earnings here. Yeah, it had a pop. Notice how all the moving averages are stacked up right here. If you look over here on the left, the moving averages are all between $6.50 and $7.11. And so, yeah, between the $6.50 and $7.11. So right now it's at $7.44 in after hours trading. There was you know, a revenue beat here. It missed on the EPS, the earnings per share, but it did beat on revenue. But it turns out people were the street like the news, and so we've got a nice move going here. Yeah, if we look here, you know, they got the smart glasses. If you look here at the chart, what really needs to happen is if you see it pulling back at all, it needs to stay above this green line here. That's the 50-day simple moving average at 711. That's the top moving average on this chart. As long as it stays above 711, you see it trading above 7 tomorrow, then it's intact. It's trading above all the moving averages, and it's super bullish. And then I'd be looking for a run up here to this 825 zone, which is the closing price back here in July, the high close. And so that is the target. Okay, so if it's 744, you're looking for a run to 825. A close above this high close in July, that's going to be the signal that it wants to head higher. Once again, for any of these plays, if you see the black candle forming, if you see a gap up open and then it starts trading below the open and you get a candle like this, a black candle forming, you know, that's your signal that they're locking in gains, that the bears are attacking. You know, a lot of times it's good just to lock them in and then look for a reload lower. Okay, and then I want to finish up here with the HMNY. This is the 15-minute chart here, and so it's down 7.5%. I know I posted a lot of information on this today. We had some people in the chat that lost some money on the last reverse split, holding through the reverse split, which is never a good idea with the penny stock. You know, yeah, I just don't. I hate to see people lose money. You know, especially on a stock like this. But everybody's on their own. You know, and trade at your own risk. And our saying is there are no bad stocks. There are only bad entry and exit points. And so for a dilution monster type play like this that's getting ready to reverse split at any time, the key is just don't get caught holding the bag. And so you just want to enter and exit when the chart's right, and then you know, take the money and run. And so with this setup right here, in my opinion, it's looking like that it could go, it could possibly break out here, or it could possibly break down. It's right at that flex point right here where this consolidation period is going to end soon. Look how tight the Bollinger Bands are here. If it breaks above the green line there, that's the 50 simple moving average at 6.5, that's going to be your signal that wants to head higher, and you're going to see a run up here to the 100 simple moving average at 7.4. If it drops below the lower Bollinger Band there at 6, then it's going to test this low all-time low close over here on the 15-minute chart, and this is the all-time low close in the history of the stock. Then you're going to see the breakdown lower. So it really needs to hold that 5-8 support zone. Right now, that 6 level is going to be crucial. You don't want to see it drop below that. If you see it break above, you notice the moving averages are changing. They're always changing, so we put out the numbers, but you have to follow the moving averages, not the number that was put out, because they're always changing. You have to check to make sure that it's still at that same level, and you have to adjust accordingly when the moving averages are changing. But right now, the resistance level to break is 6.5. The support level to hold is 6. One of those two levels is going to break very soon, and tomorrow you could either see a pop or you're going to see a drop. And you know, they have some time here. Notice that the volume dried up compared to the other days. So you know, they're likely to want to run this thing. I mean, I think it would be in their benefit to get a rally going before they do another reverse split and dump more shares. Now this is 9 days in a row below $1, and so yeah, they won't get a letter from the Nasdaq until they're down 30 days in a row below $1. So they have some time to play with here. So you know, it's not in their benefit, I don't think, to go all the way down to penny, to go sub penny. You know, it could get really ugly if they take it to that level. So I'm not sure who's in charge of their whole dilution factory thing, but it would be in their best interest to let it run, let it breathe. You know, maybe let it be up a couple days. You know, and then turn on the faucet. You know what I mean? I have no idea of you know, how this thing is all going to play out. But if you follow the charts, you will you will have a fighting chance right here. You know, the break above that middle Bollinger Band was a signal that it was in play, and then it got above that 50 simple moving average. When it formed this long upper wick, that was the signal to lock in gains. If you didn't exit there, the exit was on the break back below that green line. Now we had been waiting for it to set up again. You know, it has this descending resistance line. Notice how now it's channeled sideways. Many times, I mean, it's just set up. It's like a champagne bottle that is just all shook up, and it's gonna pop, and it's either gonna pop to the upside or pop to the downside, likely tomorrow. So be on, you know, watch HMNY tomorrow. We'll see if it breaks above 6.5. That would be great for everybody trading this. I'd love to see everybody make money, but just know that people that are hoping that this is going to work out good in the end, you know, when they reverse split again, which they're going to have to do, it's not going to be good for anybody that's holding. All right, thanks for doing this video.